Welcome to Transfer of Title, yet another episode in Tom's Next Level Exam Prep series. I'm Tom and I designed this series to help you pass your exams, just like I've helped hundreds of my previous students. I urge you to watch my Welcome and my Exam Insights and Strategies videos for a complete overview of this entire series. You'll learn how to get the most benefit out of these topical videos. Here's a recap of the important points from my welcome video. We're in test world in these videos. My focus is on the testable information that you'll need to pass your exams. So these videos are designed just to be a supplement to your education provider's course materials. I'm certainly not going to reteach the entire course. So as you watch my videos, please take a lot of notes. I'm a firm believer in that, and it's a proven fact that the more notes you take, the more things you write down, the more likely you are to recall those when you need to. So when you're ready, grab your course materials. Grab a nice notebook for plenty of notes, and keep your positive attitude handy. We know we can get you through the test. Let's get started on transfer of title. Here's some basic information about transfer of title. First of all, title to a property is a concept. The deed is a document that shows you probably own the property. You probably have title to the property, but it's just one of the documents that you might be able to show. But title to a property is a concept. It's intangible. Think about it that way. So with that in mind, they might ask you this on the test. What document in real estate proves that the seller owns the property? Think about that for a second. What document proves the seller owns the property? Well, be careful how you answer that one, because one of the choices on the test is going to be there is no document that proves the seller owns the property. And that's the correct choice. There is no one document in real estate that offers proof of the seller's ownership, and proof is the key word. So what are buyers looking for when they buy a property? If the seller can't prove they own the property, what does the buyer get? They get a deed and other documentation that will show that the title is marketable, but it doesn't prove ownership. So marketable title is a key concept. What is marketable title? Well, it's a property with no clouds or defects on the deed or on the title, nothing recorded at the county recorder's office that shows somebody else thinks they own it. And so marketable title for test purposes is title that is free from reasonable doubt. If they phrase that in a test question, one of the answers might be the buyer seeks a title that is free from all doubt. There is no all doubt, no document that proves that. So what do buyers seek when they buy a property? A buyer seeks 4 choices on the test. Remember, I told you all your exam prep questions will be multiple choice with 4 choices. When a buyer buys a property, what does the buyer seek? They seek marketable title, which is title free from reasonable doubt. Here's some terms you want to know the definition of and understand how they work in the whole process of transferring title. What is an abstract of title? An abstract is a historical document of all the documents recorded at the county recorder's office. You don't have to go to the recorder's office to look them up. They're in an abstract that can be carried around. That's what abstract of title is. What is the chain of title? The chain of title is the subsequent ownership from one to another that always shows there is no break in the chain of title. One of the things that a title examiner looks for, this would be an answer to a test question, a title examiner is always looking for an unbroken chain of title. A quiet title lawsuit. Well, a little background here. If there are clouds or defects on a title or somebody's ownership, if there's doubt on that ownership, that means there's a cloud on their title. Sometimes a title with clouds on it is referred to in the marketplace as a noisy title. You might hear attorneys say something like, boy, that property was in so much trouble, the title was so noisy we couldn't even transfer it. That means there were a lot of clouds or defects on it. Well, how do you deal with a noisy title? You try and quiet the title down. So you have a quiet title lawsuit to solve or address those defects or those clouds and get rid of them. And a title policy is one issued by a title insurance company who will look over all of the title work. They'll look over the abstract. They'll find hopefully an unbroken chain of title. And if they're satisfied that the chain of title is unbroken and there's no clouds on the title, they will issue a policy to the home buyer and say, we will insure you against any problems you might have with the title. Because we've looked at it, we don't think there's any problems. You can buy an insurance policy from us, and if you find defects later after you buy it, we will come back and fix them. I just mentioned clouds on a title. Those are encumbrances. Those can affect the marketability of the title. So if there's a cloud, sometimes called a defect on a title, that certainly can limit the marketability. With too many clouds on the title won't be marketable. Another term you want to know is alienation. Two types of alienation of property. Alienation of real estate, first of all, simply means any transfer of title. If I sell a house to you, if I sell my residence to you, you pay me a good price, I want to sell it to you, then at closing I have alienated myself from my property. I used to own it, I don't own it anymore. You own it. So I've alienated myself from that property. Now if I want to do that because you paid me a good price, now I have voluntarily alienated myself from my property. So that's voluntary alienation. And involuntary obviously will be the opposite of that. Maybe a bank forecloses on me. I don't want them to take my property away, but if they foreclosed on me and are successful, they will. So I can lose my property, but I didn't want to. So a mortgage foreclosure would be an example of involuntary alienation. This is another area where I believe word association lists that I talk about in my exam insights video will really be a very valuable study aid for you. So make word association lists as you study a lot of the vocabulary words you have, and I know you have a lot of them. Deeds. What does a deed do to transfer real property? You know, deeds are used, but what does a deed convey? A deed conveys the rights, the title, or interest somebody has in a property. In the property ownership video, I talk about the fact that rights are intangible. However, rights are real property. And that confuses a lot of new students. It did me when I started out. You can't see it or touch it or feel it. It's a right, the right of possession, the right of enjoyment, those rights. But they are real property, and a deed transfers those. So who are the parties? This is where you have to study and know your O's and E's, the OR and the EEs. If I sell my house to you, at closing, I give you a deed. I'm the grantor. I've given you the deed. Remember, the ORs are givers. You're the buyer. You receive the deed at closing, so you're the grantee. ORs are the givers, EEs are the receivers. On the test, you can bet they're not going to say things like owner, seller, or buyer. Always going to use the term grantor or grantee. So you need to remember which is which. And remember the statute of frauds. Statute of frauds requires that basically in all states, the deed for the transfer of any interest in real estate must be in writing. Now here's a little test tip. This isn't on the slide right here, but also make a note of statute of limitations. Those are the two statutes. People get confused on the test, understandably so. Statute of frauds says deeds must be in writing. Statute of limitations deals with time. 10 days to do something, 2 years to do something. You have a limitation to do a certain thing. Home inspection, you have 10 days to do your home inspection. Anything with a time limit is related to the statute of frauds. I'm sorry, statute of limitations. I got confused. Statute of limitations. But statute of frauds, the word association there is in writing. So if you want to make that note, I recommend statute of frauds in writing. Statute of limitations equals time. Very critical slide here. Look what we've got, the essential elements of a valid deed. Surely to show up in at least several test questions on your exam. The questions might go like, all of the following are essential elements of a valid deed except, and I'll share with you what they're going to throw in there in just a minute. But let's just real quick review the importance of each one of these essential elements. We said it has to be in writing. Why? What statute requires deeds to be in writing to transfer real estate? The statute of frauds. It has to be a legally competent grantor. As the seller, I'm the grantor, I have to be legally competent. And look what it says for the grantee. Remember, I'm selling my house to you, you're the grantee. Do you have to be legally competent? No. You have to be identifiable. And that's one of the test questions you'll see. All of the following are required for a deed to be valid except one of the choices will be a grantee is legally competent. That's not one of the essential elements. The grantee only needs to be identifiable. The grantor needs to be legally competent. Welcome to real estate testing, right? I know a lot of vocabulary, a lot of things to keep straight. Write things down, make your word association list. There has to be consideration. Now, make a note in your notebook. It says it on the slide here. Consideration is not earnest money. What is consideration? Consideration is promises. I promise that I own the property. That's in the deed. There are some other promises that'll be included. We'll talk about those in a minute. But remember this for the exam. For a deed to be valid, it needs to have consideration, but the consideration in a deed is promises, but it is not earnest money. Okay? There needs to be a granting clause. If I sell you my house, what am I granting you? Am I granting you a fee simple absolute estate? Or am I saying in the deed, I grant you ownership of this house for as long as you shall live? Well, that would be a life estate. Or what if I said in the deed, I grant you this property and you get to own it and I'll deed it to you, but the deed says as long as you use it as a woman's shelter. That's going to be fee simple defeasible. So review your other types of deeds. But the granting clause here simply has to state what exactly am I transferring to you when we close. There has to be a legal description clearly. We have to know exactly what property we're talking about. They have to have the signature of all the grantors. Now, who are the grantors? Those are the sellers. Have to have signatures of all the grantees, all the sellers. I'm sorry, grantors. Even I got it wrong. So all the grantors, which are the sellers. This will be a bigger issue for you in your marketplace coming up over the next few years because you're going to have a lot of children inheriting properties from their parents. Think about this just for a second. You have 3 siblings inherit a house when their last surviving parent passes away. 3 siblings inherit the house. They're all adults. And they're all married. How many owners do you have? 6. Everybody who is an owner of the property has to sign the deed. They're all grantors. And you have to have acceptance by the grantee. That means this: at the closing table, when I sell you my house, the closer is going to hand me the deed. I'll look at it. I'll say it's correct. I'll sign it. My wife will sign it. We're the only grantors. Then the closer is going to slide the deed across the table to you and say, do you, as the grantee or grantees, do you accept the deed? As soon as you accept the deed, the property is yours. Title has transferred at that moment in time. That's why I said in the beginning, title is a concept. So once you accept the deed as the grantee from the grantor, it's your house. Title has transferred upon acceptance of the deed. I wanted to be sure and take a few extra minutes on the last slide with valid deeds. There'll be a lot of questions on deeds on your exam. But here's the other two categories of deeds they'll have questions on. A void deed is pretty cut and dried. It's one that's missing at least one essential element. If it doesn't have all the essential elements, it's on its surface void. Well, a third type of deed that trips people up on the test quite often is a voidable deed. Voidable means that one party can back out if they want to, based typically on fraud or duress, or if one of them is a minor. Let's talk about that for a second. How can that happen? Well, if you wanted to buy my house, and I didn't want to sell it, but you decided to send somebody over to my house the day before closing and make it very clear to me that I better sign the deed at closing, otherwise I could have some big problems in my life. That would be duress. Or fraud. Maybe you defrauded me somehow. But I signed the deed at closing. After the fact, could I get out of that sale? Could I declare the deed voidable? Yes, because fraud or duress was involved. What if the deed was signed by a minor? And this is the one you'll likely see on the test. A deed involving a minor is not on its surface automatically void. We can argue about it, we can discuss it, have that for a later time. We're in test world here. If it says minor on the test, and the question is about deeds, the correct answer is voidable. There's a few different types of deeds that we have to talk about. The first one is a general warranty deed. This is the deed you'll see almost all the time with residential property transactions between a buyer and a seller. It's whatever buyer wants. It's a general warranty deed. What do you know about a general warranty deed? For the test, it has the greatest protection for the grantee. Who's the grantee? The buyer. Remember that phrase for the test. Greatest protection for the grantee. It contains 5 covenants. Well, make a note if you want to. Be smart to do that. A covenant is a promise. Remember a little while ago we talked about essential elements of a valid deed. One of the essential elements was consideration. And I said consideration is promises. These are the 5 promises that are in a general warranty deed. Okay, so just real quick, the covenant of promise of Sizen. That's simply a covenant or a promise that, hey, I really own it, and I'm promising that I own it. There's no proof I do, but I'm promising that I own the property. Okay, a covenant against encumbrances. I'm promising you there are no encumbrances on this deed when I give it to you at closing. I'm promising you that. Okay? I promise you quiet enjoyment. I promise that you won't have somebody else knocking on your door saying they own the property. I promise you further assurance. This is a big one. Further assurance means that if you do have problems with any of these other covenants, I promise you in the future, I will come back and solve the problem. That's my promise to you of further assurance that all of these will stay in place. And how long do these warranties last? Forever. That's why it's the greatest deed with the most protection for the grantee. Here's some other deeds that'll show up on the test. We're not going to take a lot of time with each one, but I'm going to give you an example of each one. And this will help you in the exam because that's likely how you'll be tested on these. A special or limited warranty deed. That would be issued by a bank. If a bank takes a property back in foreclosure, and now the bank is the owner of the property, and you buy it from the bank's going to give you, they're the grantor, give you a deed at closing. But the bank's not going to warranty that deed back to the beginning of time. The bank is going to limit their warranties to the time period when they owned it. Another type of deed is a bargain and sale deed. There are no warranties with that. Usually they're involved when you buy a property or foreclosure or a tax sale. You'll get a bargain or a sale deed. No warranties at all. The third type you will see on the test is a quitclaim deed. A quitclaim deed, number one, it offers the least protection for the grantee, you, the buyer. There are no warranties, and if you see the word divorce in a test question about deeds, the correct answer is likely going to be a quitclaim deed. Question might go something like, in a divorce, how does one spouse make sure they have cleared themselves of any interest in the property? They use a quitclaim deed. A couple other types of deeds that you might see a question or two on a test about is a trustee's deed. In those states that you use deeds of trust, remember it's a three-party instrument. You have the buyer, the lender, and a trustee involved. The trustee holds legal title. If the property ever goes into foreclosure and there's a high bidder, then the trustee would issue a deed to the high bidder at the foreclosure. That's a trustee's deed. Or a deed pursuant to a court order. Somebody goes to court, argues about the ownership of a property. If a judge says that they were correct in their claim that they owned the property, then the judge would issue a deed pursuant to a court order, where the judge would actually transfer ownership by court order. And direct from my Department of Redundancy department, this is what happens at the closing table when title to the property actually transfers. The deed is signed by the grantor. That's the seller. The deed is then delivered to the grantee, slid across the table by the closer, and asked the grantee, do you accept the deed? Once the grantee accepts the deed, we said that's when title transfers. That's when ownership transfers. That's a very important point. They'll ask you that on the test. Here's why it's important in the real world. If everybody gets up and leaves the table after the closing and drives over to the property, and that house is on fire, whose house is burning down? The buyer's house, because they took ownership at the closing table. That's why most lenders will mandate that if you're going to borrow money to buy that house, you must have proof of homeowner's insurance in place at the closing table in case of a catastrophe like that. So title transfers at the closing table. The deed should certainly be recorded to provide constructive notice. I have you make a note here if you want to. Constructive notice means putting a copy of the deed and recording it in the recorder's office at the local county. So you've recorded the deed with the local recorder. That's constructive notice. Constructive notice to who? You've talked about this in your classes. Constructive notice is recording a document, and it's constructive notice to the world. Anybody who wants to look. The note I really want you to make is actual notice. What's the difference between constructive notice and actual notice? Now, actual notice is not on the slide, but I like to take this opportunity to make a contrast between those two, so when you see them on the test, you're more likely to remember them. Actual notice is going to visit the property. You actually see what's going on. You see if there's any encroachments, if there's a fence or a garage built over the property line. So actual notice is actually visiting the property, and constructive notice is placing a document in the county recorder's office. I want to highlight here what you're likely to see on the test about some closing procedures, okay? The settlement procedures. Definitely prorations occur during settlement of a property. If I'm selling my house to you and we close on the 15th of a month, but I paid the water bill for the entire month on the 1st of the month, should you at closing give me some money back to cover your portion of that water bill that covers the time period that you own the property? Yes, of course you should. That would be paying your fair share. So I paid the bill for the whole month, but you owned it for the second half of the month. That's a proration. If you watch my calculations and math video, we go through some details on how to talk about debits and credits and do the prorations. If escrow is used in a closing, then an escrow officer would settle up the estate. Now, sometimes closings are done in escrow, which means both parties are not present at the same time. I might go in and sign documents as the seller on Monday and everything I've signed, but now you don't go into Tuesday to sign all your documents and accept the deed. Well, that closing was closed in escrow. Think of escrow being in limbo. The closing was done in escrow, so an escrow agent would have to handle those documents in between times. You sign it and I sign it. If there's no escrow involved, many closings used to be done face-to-face, buyers and sellers all around the table. Since COVID, many years ago, that hasn't been the case so much. But if there is a case where there's no escrow involved, then a simple closer or a settlement agent can close the transaction. Just a few comments about transferring ownership of foreclosed properties. Now, I'd encourage you to grab your notebook out here because I'm going to give you some other information that isn't quite detailed on the slide here, but is directly relevant. Trustee's deed or a sheriff's deed is used when transferring foreclosed properties. Well, a trustee's deed is used in states that used a deed of trust. And a deed of trust state, good note to make, good reminder note, a deed of trust state is a title theory state. If you recall from your other classes, a deed of trust is used in a title theory state, which means the trustee holds the title until the loan is paid off between the buyer to the lender. So the trustee holds title. If that property goes to foreclosure, then the trustee would issue a deed to whoever was the high bidder at the foreclosure sale. Other states, I'm up here in Minnesota. Minnesota is a lien theory state. When a buyer buys a property in Minnesota, the buyer gives the lender the mortgage and the buyer gives the lender a promissory note, but then the lender gives the buyer the deed, which means the buyer holds title to the property, but the lender puts a lien on the buyer's deed and on the buyer's property. So mortgage states are lien theory states, deed of trust states are title theory states. And that's the first line under our heading here. A trustee's deed from a deed of trust state is used, or a sheriff's deed, if it's a lien theory or a mortgage state, is used to transfer property to the high bidder at a sheriff's sale. Some states allow the buyers a redemption period. The homeowner who was foreclosed upon, in this case we're calling that whoever bought the property, got foreclosed upon. Now the foreclosure sale has taken place. Some states allow that original buyer to redeem their property. Minnesota is very consumer friendly. If a buyer in Minnesota gets their property foreclosed upon and there's a high bidder at the sheriff's sale, that original buyer has, in most residential cases, 6 months to redeem their property. In other words, pay the lender all the money they owe, and then foreclosure goes away. Some states have no buyer redemption period. No redemption period for the original owner, which means whoever buys the property at the sheriff's sale is the high bidder. At the sheriff's sale, once they give the sheriff the cash, they get the keys and the deed, and they're the owner. So in Minnesota, where there is a redemption period, and other states that have redemption periods, if the buyer redeems their property, what happens to the high bidder at the sheriff's sale, who gave a lot of money to the sheriff? The high bidder at the sheriff's sale would, in that case, get their money back. Sometimes they get it with interest. And that concludes another fact-filled episode of Transfer of Title. Thank you very much for watching. I truly appreciate it. There's a list on the screen of my other national exam topic videos. Please feel free to watch those if you feel a need to refresh or regroup on any of those topics. But stay positive out there, stay focused. I know you can do this. And as always, if you like my videos, please hit the icon down below. If you choose to subscribe to my channel here, I will send you updates when I release other videos in my career prep and my skills prep video series. If you want to leave me a comment, I would love to hear your comments about the video. And if you know somebody else who's taking their exam soon or in the process of getting their real estate license, please feel free to share my video channel here with them. Thank you very much.